Alright, so I know my volume's on now, but this is why I had push to talk on because I'm actually in a coffee shop at the moment and there's a lot of noise. So, um, yeah, apologies for that. I was trying to mitigate the background noise and volume, which is going to be kind of difficult here. I was going to run this off my phone, but it was not steady enough to run a stream off if I tested it. So, alright, is the background noise bearable for you guys? Anything? It's good? You guys can deal with it? Okay. Sorry about that. I actually ran around to a couple different coffee shops to find out which one had the best internet so that I could run the stream for you guys tonight. Um, so I'm sorry. Let's go ahead and restart the lesson then, shall we? Bit of an awkward 15 minutes there, but let's see. All right, so you guys probably just saw my mouse going around and you're like, hey, he's talking about volume. Cool. I'm assuming he's talking about volume. So basically what we started off with was the reason we're kind of opening this up and we're talking about this is because you guys, when we ran the poll last week on the two topics you guys were most interested in, obviously moving average strategies was the topic last week because that was the majority vote. But close behind it, I think only by 2 votes, was volume. And so I figured I'd talk to you guys about it this week and kind of give you guys a little primer on how I use volume in trading and how I think it can be effectively used and very simply um, for to indicate strength of a move, right? So the first thing I was going to show you when you first add the volume indicator to your chart, which I believe every trader should have on their chart. Um, the first thing on TradingView you're going to want to do is right-click this, and then move to New Pane below. That unmerges. Well, no, that's not what I meant to do. There we go. That's what I meant. Maybe no. Okay, I want to click on the volume. Move to New Pane below. There we go. That's what I meant to do. And what that does is that just separates. That creates a new area for your volume. So it's not relative to it's not relative to the chart anymore. It's absolute. Kind of like a log versus auto scale. Just a little bit different. I find it helps. You guys can do what you want with it. Just a little trick that I like to use. So that's my first volume tip for you. It has nothing to do with trading, but so the thing we're looking at, right, is, we're all wondering, we just saw a massive dump from Bitcoin, right? We just saw a massive dump. We're wondering if it's going to stop here, if it's going to bounce, right? I think that's pretty much forefront in everybody's head. We know the rest of the market will more or less follow to an extent. So that's what we've all kind of got our eyes on. So I bring up volume. It's actually great timing because that's one of the primary indicators I'm watching right now. Obviously, I use my support and resistance levels. That's my personal style of trading. You may have a different style, but volume is often the confirmation of a move or the end of a move, right? So I'll show you what I mean by that. So obviously we see, relatively, it's kind of hard to see because the little icons are in the way. We see, relatively steady volume here. Um, Before this dump, and then obviously in the dump we see massive volume. There's a lot of trades being placed, buys and sells, because somebody's got to be buying all the sells, right? Even though that's going to be a lot lower. So large volume candle, but then we kind of see volume peter off, right? As we kind of bottom out, and that brings up the first way to use volume. When you're looking at just flat volume, you're looking for almost the same as a divergence on the RSI. So towards the end of a move, volume ends up decreasing, right? Because we have a whole bunch of sellers, and then we see a large move here. It ends up closing at about the same area, but the range is tightening, right? We're not seeing these massive candles anymore. So what we're looking at is less willingness. We're looking at uncertainty in the market, right? We're looking at uncertainty in the market and we can tell because there's fewer people buying or selling. People tend to buy or sell when they're sure what's going on. So we see a massive dump, people are very sure it's going down. That's why we see so much volume, so much sell volume. The people who are sure that, anywhere in this range is going to be a good buy are obviously snatching that up, but the sell pressure is enormous, and so it drops. So the volume is going to indicate how strong the market sentiment is in the direction of the move, which is directly reflected in price, right? You guys following along here? So the way I use it is anytime after a move like this, if we're seeing declining volume, in this case on a bearish move, we see declining volume, and that tells us that the move may not be over, but it's at least taking a break, right? Because we're seeing uncertainty enter the market. Uncertainty is low volume. This is where the smart money has to play, which is kind of antithetical, because smart money, needs liquidity because it's often big money, but they make their moves while everybody else is unsure. They don't know what's going on, and the smart money is the money we want to follow, right? So, that kind of makes sense. So as we see this uncertainty in the market, right, we also see it's right at a support level. I'll just show you where that's drawn from. So that support level is drawn from the bottom of the wick of this OB that we drew. If you guys watched my market breakdown stream on Sunday night, it is still archived on the channel if you guys want to check that out. We talked about some OBs and kind of how I break down the market personally. It's not going to be the same for everybody, but that's just my personal style. Can be very useful. But the reason I picked this level is because price is respecting it, right? Normally I wouldn't draw this, but I see, hey, look, it's pretty obvious that price is doing something around that level, right? We can see it. Very good respect here. Obviously, on the first impulsive move down, we see a break. That's pretty common. We also see a second break. After a move that large, that's also pretty common. But then we see fairly nice respect here, right? Just a little bit of a wick below, almost exact touch, and then we're just hovering just above that now. So as we see this decline in volume right on top of a support level, everything is telling us, okay, the market is at least taking a break, right? Now here's when we need to get worried, is if volume starts picking up, but we don't see a large move upwards, right? If volume starts picking up and we're not going up, that means the market's starting to find surety again, right? It's certain what's going on, or they think they are. And if enough people are certain about something in the market, it makes that happen, right? So if there's enough volume without pushing us back upwards, odds are that support level is going to break. We're going to fall right through it. Okay, and we can find examples of this. So you can see, like, hey, so we have, low volume right above support, right? Low volume, low volume, low volume, low volume. Now, I'm going to scoot this over a little bit. Actually, I was looking more back here. So we see low volume, and then we see increasing volume, right? It's steadily increasing. Not a whole lot, but it is increasing. So it's a little bit of an uptrend line there, right? So we see a little bit of an increase right there. Price doesn't do anything. It's just staying flat, and it's right on top of support, right? Sure enough, okay, we see a decrease in volume. That's a little bit reassuring, but after that, we see a dump, and we break that support level. Now, it doesn't go very far, but it does break, right? So anytime we see an increase in volume right at a support or a resistance, this works for resistances too, we want to be cautious. It doesn't mean it doesn't mean the support or resistance is going to break, but it means we need to be cautious because there's a good chance of it. So that's kind of what I'm looking for here where we are in the market. So if we see an increase in volume without an increase in price, I'm not going to be taking long positions. That doesn't mean it couldn't go up, but I'm not confident enough in it, if that makes sense. So, I'm going to check in. Are you guys sticking with me here? Everything making sense? You guys can still hear me? I'm sure you can hear me right now. Or not me, but background noise. There's still 10 of you in here, so I'm assuming it's not terrible. Alright, so that's kind of how you would use volume. Now, the other indicator I'm going to show you is just a little bit easy to visualize for some people, right? And that is the volume oscillator. Whoop, not that button. There we go. So I'm going to go ahead and add that, change the color so you guys can see it a bit better. Alright, nobody's commenting in there. I'm not sure what's going on. But, yeah, so the volume oscillator here is kind of like an easier to watch representation, right? So we still see the same things, right? We see the massive increase in volume. So, oscillator goes up, that means increase in volume. Oscillator goes down, that means decrease in volume. And this is actually based on a series of moving averages on the volume value itself, which is a little bit complicated to explain, but, I'm kind of just explaining the gist of it. So we see a massive increase in volume on the drop, right? And then decrease in volume right as we're hitting support, right? It gives us the same information, but in a way that's a little bit easier to read for a lot of people. So if we go back and look at that other area I was talking about, where we're sitting right on support, we have low volume, right? We have this big spike in volume, then it kind of peters off, low volume, and that makes sense, right? We're sitting low volume right on our support. Now we see an increase in volume without an increase in price. Price stays completely flat here, right? The range is super tight, nothing really happens, but it's a large increase in volume. That's a warning signal. Yes, we see the decrease in volume afterwards, right? Volume drops back again. But on the next spike in volume, it breaks downwards, right? So that's kind of what we're looking at. Now here is kind of tough to read because, again, this is a tight range, and this isn't a foolproof method, right? Nothing in trading is absolutely foolproof. You're never going to be able to predict with 100% accuracy. But the point being, there's not really a whole lot that the volume's able to tell us right here, right? It's kind of confusing. We see, we see a little bit of spike in volume, but we're also seeing a spike in price. Then we see a decrease in volume and an increase in price. Well, what does that tell us? If there's a decrease in volume, but there's an increase in price, that tells us the market is losing confidence in the direction we're going, right? Now, it just so happens market regains confidence, but it's something to keep an eye on. Personally, I would have probably taken a short right around here. I may have actually done that. I don't recall. I'd have to check my trading journal. Um, but to me, this looks very bearish, right? Right here. If we didn't see all this, if we didn't see all this stuff over here, if we just saw this looks pretty bearish, right? We get rejected by resistance, right? We see a decrease in volume as we're going up, and then on the next candle we break through. But normally that is a pretty good indication that we're looking for some downward movement, and I'll show you what I mean here. So so we have spike in volume, right? And we're right at support. We see a spike in volume, and it's a large move up. Then we see a decline in volume. The market's uncertain. We see that by bouncing around a little bit. We see another spike in volume. This was because of BitMEX downtime, I believe. That was that candle right there in August there. And we see a decrease in volume. This is really low volume for a rise. That's not healthy. That's not good, right? If we want to see continued momentum in either direction, we want to see an increase of volume with the change in price, whether it's bearish or bullish. So we do see an increase in volume as we kind of get up here, right? See an increase in volume. Unfortunately, it's kind of not a good sign because we see an increase in volume on the selling candle, right? Even though there are other candles that are equally sized that had much less volume. That's a bearish signal. Now we do continue upwards on declining volume, right? It declines, volume's going down all the way to here, and then the next volume spike we dump, right? So you can use this the same as you would use the RSI divergence, like I was telling you earlier. So if volume and price, if price is going up and volume is increasing, that's bullish, right? We're seeing increased market certainty that is shown by the level of buying orders in the direction that the market's currently going. So if the price is going up, volume is going up, that's bullish. If price is going up and volume is going down, that's bearish. The reverse is also true. If we're going down and volume is going up, that's very bearish. If we're going down but volume is going down, that's bullish, right? That indicates a pause in the market structure. We don't know that it's going to reverse, but it would be a good point to take profits if you were riding in the correct direction of that trade. Or if you want to play a little bit riskier, especially if there's a support or resistance level involved, you can take a counter trend position. Again, just be careful doing that because you can get burned very easily doing that. That's called knife catching, and I'm sure you guys have all tried it at one point or another. We all have, but it's very easy to get burned, as I'm sure a lot of us can attest. So it's going to be a little bit of a shorter lesson. So I kind of wanted to open it up to some questions to you guys. What questions do you guys have about volume? What do you think? Is there anything else that you think you want to know? I'll try to answer some questions. Let me know what you guys think here. Or if you just guys want me to shut up and get rid of the background noise, just let me know. I'm going to mute my mic real quick. Well, I'm not seeing any questions popping up. I know you guys have had time to kind of look at it. I think I'm gonna go ahead and end the stream. I'll leave it on for another minute or two. I'll let you guys think of some questions if you have any. It doesn't even have to be related to the lesson. You know, I'm down to talk about whatever, but I understand if you guys don't want to listen to the background noise. Vinny, I just saw your question. You said, so per what you said, what we should be looking for is an increase in volume without Bitcoin moving up here, right? So that's if we're looking for bearish momentum. Yeah, if we're expecting it to be bearish, then yes, that's what we want to see. So an increase in volume without an increase in price is going to be a bearish indicator. That would indicate to me that we are likely to break this resistance, right? And the next one I have marked is that 5,013, basically 5K level, right? That would be the next point of support for us. So yes, if we see an increase in volume and price stays, within this little range, I'm not gonna be super excited about that. I'm personally not comfortable taking shorts below the 6K level. So the worst I'll do is move to cash, right? I store all my personal holdings in Bitcoin. So for me, moving into cash is a short position, right? And it is for anybody. You're taking a short position on BTC. But I won't be taking any leverage positions, and I'm going to be very, very cautious about moving to cash because I'd rather just hold for even if it's another 1,000-point drop, because likely when the reversal comes, it's going to be very explosive, right? Because there's only going to be so many sellers down at these levels. There's a lot of holders. There's a lot of financial entities very invested at this point that are not just going to market dump at this point if they haven't already, right? So let's see. I think we got another question. So good stuff. Don't really have any questions. Good. I'm glad you guys are enjoying the content. Right, you don't want to pull along right now if there's likely more movement down. Right, so if you see, you might go ahead and say, okay, I want a long here, but if you see an increase in volume without an increase in price, you might go ahead and say, okay, I'm going to either tighten my stop or I'm just going to cut the position, right? So I'm in a coffee shop because the cardboard box fell apart. Yeah, man, didn't you hear Starbucks started letting homeless people in? They said they could come hang out. It's great. We're all invited. It's fantastic. Come hang out. I can't afford the coffee here, but... Alright guys, I'm going to go ahead and end the stream. Again, I'm sorry it's a little bit shorter tonight, but thanks for tuning in. I hope you guys enjoyed it. Let us know what you think about the new time frame, and if this works better for you, or whether it works better, in the mornings. Or if you guys haven't had a chance to watch the morning ones. So, yeah, let me know what you guys think, and we will try to adjust the schedules based on you guys, because that's who we're here for. Thanks for tuning in again, and you guys have a good night.